Good afternoon, ladies and gentlemen. The mood is in top shape on Dalal Street thanks to the change in stance by the Reserve Bank of India in its credit policy statement to neutral from accommodative, which essentially means that come December, you just might see a 25 basis point rate cut on the Indian economy as far as interest rates are concerned, and that has perked up many indices, although the Nifty and the Bank Nifty are still in the green on a day second in a row. So the Nifty at 25,075 is up 63 points. The intraday high post the credit policy was 25,234, but you've seen some kind of option selling coming in at that level to inhibit the Nifty, but above 25,000 is what the index is. Remember, yesterday's low was 24,700, and from that pain the index has risen dramatically. Bank Nifty, whose weekly expiry it is today, is 90 points higher, doing pretty well in terms of the uptick. Because of the statement of the Reserve Bank of India, the index had gone up all the way up to 500 points higher at around 51,600, but again profit booking inhibiting that uptick, but a very strong move, ladies and gentlemen, in the mid cap and the small cap segment. Second day in a row, the Nifty small cap index is up 1.44%, the mid cap index is up 1.2%. remember, both these indices added 2 percentage points each yesterday, and across the board the rally is now deepening further after a very sharp correction. The Nifty Pharma index is the top performing index, up 2.5%. The advanced decline ratio is 1840 shares in the green compared with 545 in the red. That's an easy 3:1 kind of a ratio, and we tracked 19 indices for you, of which 18, ladies and gentlemen, are in the green. The realty index again moving on account of the planned or the probable now cut in interest rates in December is ahead. Look at the Nifty auto index, up 1.2%. The Nifty Alpha and the Nifty Next 50, comprising of very aggressive mid cap companies and large mid caps, is also doing pretty well. The advanced decline ratio in the Nifty 500 index, the broadest measure, is 382 is to 118. Without further ado, ladies and gentlemen, let's speak to one of the best stock pickers in the market. We are joined by Mr. Sharad Avasthi, Head of Research at Smith's Securities for the Private Client Group. Sharadji, you are the best person to offer festive greetings for Durga Puja and Navratri. I am sure the festivities in West Bengal, in particular Calcutta, are in their top form, and so are the markets after a decent correction. How do you interpret sentiment on Dalal Street, sir?
Thank you, Shailji, for having me on the show. I think, yeah, in terms of sentiment, I think this correction was a welcome leg, and
Yes.
I think most of the negative things have been taken into account. So we are not expecting an extension of this correction unless and until the geopolitical scenario
Correct.
substantially deteriorates. And since there will not be a substantial deterioration, I'm not looking at a full-scale war or anything in the immediate future. I think we are on way to a year-end kind of rally, which should be very strong from here on.
Okay. Sharadji, this change in sentiment, how much do you think were yesterday the surprise results from Haryana responsible for this very sharp uptick that happened from, say, 24,700 on the Nifty? Of course, you don't watch Nifty levels as such, but how do you think that this hat trick by the BJP in Haryana contributed to the end of the correction?
I think after the previous election results, center election results, there was
Yes.
some, negativity around how the BJP would respond, and maybe it is fading out in various parts of the country. But I think now with this Haryana election and a very strong comeback, again, the fact that the government at the center could be very strong for a longer period of time, that sentiment booster comes back. And in case they can repeat it in, Maharashtra and this place, Bihar, etc., then obviously it becomes very strong in the months to come.
Okay, so that's the view coming in from Haryana, ladies and gentlemen. Sharaji thinks that this could probably be a sentiment booster for the two state elections now ahead, Maharashtra and Jharkhand. Remember, Prime Minister Modi has already announced a slew of benefits for the state of Maharashtra earlier today, and of course, there is a lot of activity on the political side, which is now aiding the market as well. Sharaji, your comment on RBI's change in stance to neutral versus accommodative. Do you expect a rate cut come December, and if so, what are the sectors and stocks which you feel might be positively impacted?
Yeah, I think it's a welcome change from the RBI and more or less on expected lines. It was not a surprise, neither a shock. Going in the future, I certainly think that in December you could be looking at a rate cut of anywhere between 25 to 50 basis points. It would, to an extent, depend on what happens in the US during that time frame. Also, I'm also expecting another rate cut from the US during that time frame,
Okay,
and
okay.
if that happens, then most probably RBI would also follow suit, and you would see a rate cut happening in December. And regarding the sectors that would do well, I think banks certainly should do well. The treasury income part has been slow.
Yes.
This quarterly updates, most probably the deposit related uncertainties that we were looking at earlier has largely been resolved for most banks. And I think next quarter onwards, even the advances book, particularly the smaller ticket loan size based on festivities, etc., should go up. LAP, I don't think should see any kind of slowdown. And I think even the capex cycle is going strong. Post monsoon, there should be a pickup in the industrial activity. So I think all over the working capital loans, the long-term term loans, etc., everything should do very well for the banks, and we might be looking at a very healthy advances growth. This quarter till now, the advances growth picture does not look very promising, but I think next quarter onwards, post monsoon industrial demand as well as demand, that should help, and add to that the treasury income part that should further aid earnings. This should happen this quarter also. Treasury should aid income this quarter also, but I think next quarter onwards it could be even more pronounced.
Fair point. And just a background for our viewers, whenever rate cuts happen in the economy, bond prices go up. And public sector banks are sitting on lakhs and crores worth of government securities. So a cut in interest rates boosts bond prices. Bond prices in turn increase the treasury income of public sector banks in particular. And therefore, these banks, which have been doing practically nothing and correcting over the last 6 months, offer a better opportunity in terms of relative valuation. Sharaji, tomorrow is the beginning of the earnings season, as also Saptami. Now tell me, within the large caps, where do you think will outperformance lie, and what is your overall feel of this earnings season? Do we see a quarter on quarter moderation of profit? And how about the year on year number? What kind of growth are you expecting from top corporates?
Largely, I think the outperformance should come in from a bit of telecom and a bit from the power sector. But beyond that, most of the results should be very subdued kind of numbers. You could expect 4 to 5% kind of growth on a year-on-year basis. The larger improvement will be maybe on the bottom line side. The top line level, we are not expecting much. That is in line with what the product market is expecting. So I think top line 4 to 5% kind of growth. Bottom line, yeah, there could be some improvement here and there, but not much. So this quarter could be a very subdued quarter. The big positive impact would come from the treasury income, as we have spoken on the BFSI side. Maybe BFSI particularly could be one that gains out of lower interest rates. But across the board, I think probably only telecom and a bit of power stocks could do very well because the demand has been very robust.
Okay. Sharaji, one of the most blowout performances that we've seen in the last 3 odd months is power. My apologies, Pharma. This is a magnificent play. Look at this consistent record highs on Sun Pharma, Divi's, Reddy's, Midcaps represented by Lupin, Aurobindo Pharma. There are so many stocks that I can name, Glenmark, Suven Pharma. What do you think is, posting this consistent rally in Pharma? How do you explain this, very sedate sector, 10, 12, 15% CAGR growth in profit and top line, now ruling the charts?
I think it's very story specific. Cipla and Sun obviously are the more generic, larger players. They don't have specific stories. The broader businesses have been doing well. US particularly, the price deceleration has been arrested. There has not been any acceleration. Prices have not gone up, but at least the downward spiral that prices were exhibiting, that has been arrested. And that is why most probably the margins might look better. The API related prices because of China closure on and off in COVID region, that was a problem they were facing. And logistic issues again have made a comeback because of the Israel-Lebanon issue. But I think largely, other than that, most of the other issues have been addressed, which were key to their margins. You know, on the one side, your selling prices were coming down, and on the other prices, your raw material availability as well as your raw material prices, the API prices particularly, were much higher. So I think that reversed over the last 1.5 year, resulting in a lot of re-rating for most of the companies. To be specific, I think Lupin and Aurobindo were already very distressed because of the past events that had happened in the companies and some of the products they had. In Aurobindo, there were some corporate governance issues. So valuations were what, 8, 9 times. That now has crawled back to 20, 25 times.
Yes.
Similarly, Lupin, I think the margin scenario and the top line growth scenario has come back because some of the products have received good traction in the US. But now I think most of the positives might be very well priced into most of these stocks. And in case anything negative comes in for any of them, there could be some correction. Like for CRAMS, there has been a lot of positivity of late. Even today's most probably DVs is up very handsomely. But CRAMS would see some headwinds from the fact that in case, the rupee also starts appreciating vis-a-vis the dollar as most of the other currencies are done, then CRAMS comes in a sore spot actually. So I don't think right now at these valuations, the CRAMS stories make sense. The Chinese change, I think that is something that is positive for companies like Piramal, Syngene, etc. They could gain out of it. But Piramal, I think most of the positives are already priced in at current prices. Even Syngene, I don't think there is a lot of valuation comfort. So when you scan through the space, maybe I would miss some names on the smaller API side or some companies. But largely, when I look at, I think if it's in the front line, I would still be comfortable with Dr. Reddy's. The valuations are comfortable vis-a-vis most of the other companies, and the Indian business should do good. And this quarter, most probably, the US business part of most pharma companies should also do good. So I think this quarter also, most probably, if I have to take a bet between something that can do well and valuations are comfortable, I think Dr. Reddy looks better vis-a-vis the rest of the pack.
Absolutely, on a monthly basis, Dr. Reddy's has done nothing. And look at how Divi's is outperforming, Sharadji. You know, moment it's out of the Nifty, it's like a weight that has lifted out of its shoulders. When did you last time see Divi's up 8% in a single day? It's such a slow coach, but what a fantastic performance. Record high beyond 6,000. I am now thinking in terms of maybe this is a split and a bonus candidate.
Yeah, maybe. I think it was a fantastic performer till 2021, 22. I think 21 end, right? After that, it did nothing for the last 2.5 years, 3 years. But I think at that time also, if you look at the valuations were very sky high. And after that, some of the capexes did not yield the desired results for the company. Some capexes were delayed. So I think once you are buying something at 80, 90 times, then it does create that problem that if something does not, emanate the way you want, then obviously you could be stuck into it for a very long time. But at these prices, what are you looking at? 1 year forward, it's already trading at 70 times. The scenario is very similar to what it was around, 2021 last. And so I think at these prices, it's difficult for you to make money. And do I think that I'll get it cheaper within the, say, next 1.5 year? I certainly think so. And at best, what could you get from here on? I think you would get market linked returns. But DVs is a volatile stock, so 10% movements can happen in a day or two. But largely, I don't think there's much upside left from current levels. So it's better to avoid at these prices.
Fair point. And, you know, one of the very rude learnings of this correction in defense and railway has been that whether momentum players, traders and short-term investors calculate the PE, the relative valuation or not, but the market of course does, and it sort of sends a very heavy bill once that calculation is over and people are left holding the baby and the bath water with them. So that's been a great learning, and of course it comes against the backdrop of a very sharp rally in pharma. In terms of deployment of fresh capital, Sharadji, where do you think lies value at this point of time? What are you telling your private client group कि कहाँ पैसा डालो?
Maybe diverse group, but generally, I think at current prices, maybe LIC is corrected substantially, being a large cap story. I think if you consider the embedded value, the fair value should be around 1350, 1400, even at one times. So I think that is something that can be looked at. That's a decent upside. Reliance after the recent correction, I think it does make sense. Even if you have a 1 year forward target of 3300, 3400, that's decent upside from current prices. So I think within the large caps, these two make sense. HDFC, obviously, I continue to be bullish. HDFC, Kotak, and IndusInd Bank also, I think valuations are very comfortable. UPL, I would continue to bet on. I think going ahead also, the numbers would look very well. And that re-rating can substantially re-rate the company to a higher level of valuation.
Okay, so these are the top 5 that Mr. Avasthi feels people can get into in a SIP format. Life Insurance Corporation, India's largest insurer. Reliance Industries, of course, the most profitable and the biggest market capitalization company, which is available below 200-day moving average. And of course, HDFC Bank and Kotak Bank from the banking stable. Again, for the last 4 years, they haven't done anything, but maybe a trigger will come one day, and Sharadji's and to some extent even my stance will be vindicated on both these counters. And of course, UPL, India's largest agrochemicals company, showing signs of revival. Remember, with Sharadji, the beauty is that he buys beaten down counters which nobody is looking at, and then in a span of maybe 1 or 2 or 3 months, you see that sharp spike coming in, because he buys them when they are in pain, as you can see in terms of RIL and HDFC Bank, and of course LIC as well. Sharadji, beyond the top 5, do you think this is a time to maybe step into mids and smalls, or are you concentrating your energies only on large caps?
The type of valuations we are at, I think it's if you don't have a very long-term horizon and if the idea is not very appealing to you, it's better to stay with large caps. But within the mid-cap, small-cap space, if we have a conviction idea, high conviction ideas where we are willing to stay put for 4-5 years and the stocks have corrected substantially, providing you a very good entry point. But we are not afraid to dipping our hands there. I think Fusion, we have spoken a lot, 2 or 3 times I've spoken on your channel also. It's come down.
Yeah.
But I still stay with my conviction. Sheila Foams is another idea that's not done much. Similar idea would be HLE Glasscoat, Inter glass lining company. I think they're also with the capex and some of the new products they are launching, it could do very well in the years to come. And these are stocks that have corrected substantially from the upper zone. So I think they make very good sense to buy at these prices. Though the markets do correct, they will also correct. But the conviction is strong enough to hold on to them. Same for Idea Forge. I think these are 3-4 mid cap, small cap names that I think I can remember offhand, and I would continue to hold them.
Okay. So top 4 that have come in on the mid cap side are Fusion Micro. Let me just grill you there, Sharadji. A 500 crore write back on my write down on outstanding loans, a change in management. One can argue that the worst is behind us, and at 229 probably this one offers value. But what really went wrong? I mean, microfinance has been a pain point for the entire market for decades. I still remember SKS. I'm sure you do too.
See, microfinance by virtue, the business is like that. In case the management fails in putting up the proper checks and balances in place, it can be a very painful business. The saving grace for most of them would be that they have a very diversified book and a very granular book. But the challenges has been that most state government changes usually propel into loan defaults on a whole regional basis, so which is very catastrophic for most of them. And I think in pockets whenever they make a new entry into a particular region, they are prone or susceptible to being defrauded at a large mass level. So that's been a problem for most microfinance companies. But in these companies, I think the processes, etc., haven't been in place. Punjab has been a sore point for them for quite some time now, and these are precautionary steps that the company is taking. But I think once that write back is done and after that, the recovery process normally starts. Beyond this, I think the process is there largely lending to self-help women groups. There usually the defaults are not so high. Rather than the direct lending books, so I think long term, I think it should not be a problem, and I think that this is an industry. This is a necessity for a country like India, where the rural population is huge. And I think in urban lands, you don't really need banking much. You're overbanked maybe. But the hinterlands do need these services. That's a need of the hour. So it also fulfills an essential service. And I think the management is strong. These are prudent measures that they're taking in advance. And most probably going forward, you will not see such large write-backs.
I'll request the PCA to fire the long-term chart of Fusion Micro. It'll give you an idea about how the stock has corrected. And like I said, for those who haven't been a part of this correction, this is probably an opportunity to get into a cleaner slate and a newer management. We live and learn in markets, and of course, you have these hurdles once in a while where company managements blow up. Microfinance has been a pain point. I can never forget that I think it was an ordinance that the Andhra Pradesh state legislator came out with, says कल से सारे microfinance loans माफ है. कमाल है ना. What a day it was. Anyway, that's how life is in markets, completely unpredictable. On 26th of September, we were hoping to celebrate 27,000 on the Nifty, and by 5th of October, we were around 24,700. But such is life, and that is why it makes for such interesting conversations with stock pickers like Sharad ji. Frontline counters, Sharad ji, in the IT space. Tomorrow we have TCS kicking off the rally, and from your end, I will always remember Coforge. You gave a call at around 4,600 rupees when the QIP was running, that this is a stock probably for 5 digits, but at 4,500 it was in the absolute pits. Any view on Coforge from now on? Record high 7,300.
Yeah, I think across the board, the mid caps might deliver better returns compared to the large caps even in this quarter. At 7,500, I think, yeah, maybe you are discounting the near term 1.5 years for Coforge. The Signity acquisition, how they integrated this quarter, the numbers will show up. But anyways, I think the market was not very happy with the Signity acquisitions, and there were issues regarding corporate governance and all that that were there in the past in Signity. But I think at these prices, if you have a shorter term horizon, 18, 24 months, I think then it doesn't really make sense to stay put. I think the IT recovery has played beyond what it can deliver over the next 18, 24 months. Long term, if you are looking at, staying put for 4 to 5 years, I certainly think you could make much better. You could still make much more money on this one. Initially, I'm targeting, 10,000, 11,000 on Coforge, and then maybe higher. But if you are looking at a short end of the time, 18, 12, 24 months, then I don't think it makes sense to stay put now.
Okay, fair point. And what's wrong with Signity? From the day this acquisition has been announced, it's flattened out at 1350, 1400, 1300 range. What are the people thinking there? I'll request the PCR to fire the longest possible chart of Signity, where people can see that it's done nothing for the last 6 months at least. Sharad ji, Signity.
I think again, it's something that you're not expecting much from the company now, unless and until the integration happens, and after that, the Coforge management takes it forward from here. most probably. And even before that, people were not very gung-ho, at least the larger institutional investors were not very gung-ho about how Signity was being run. So I think that's a challenge. So larger investors don't have interest. A bit of speculation here and there from the retail participants might be there, or some, HNI groups. But the institutional side was totally absent on Signity. And that is why when they announced this acquisition, they were not very happy about them acquiring Signity also. But I think now it has played out. People have understood that Signity had its own management issues, but with Coforge, most probably most of it will be addressed. And now with the US rate cut and most probably not having a hard landing, the sentiment is also very positive on the discretionary side of the spend. So most probably, the mid-cap names might report 5 to 8% kind of growth, while the larger names might report much lesser growth this quarter also. So I think that is the reason, there's not much focus on these names where you don't have much clarity. And corporate governance is an issue which is very central to the institutional focus.
So, Coforge, of course, is the acquirer in the case of Signity. There will be a stock swap. Does it make sense for, how should I say, a person who deals into mergers and acquisitions to maybe buy Signity for that ratio kick?
Sir, I don't know when the dates are, but in case the dates are, 2, 3 months from here, large part of the merger ratio is decided on your prevalent prices. A major weightage is to that only. So if these prevalent prices are to be played out, I don't think there will be much left on the table if you are betting with Signity against Coforge.
Okay, fair point. This discussion went into the depths of Coforge, but like I said, this one I'll remember for quite a while. It was you stuck your neck out when the stock was down in the dumps, 4,500, I remember clearly. From that point onwards, it's done wonderfully well. Almost 3 p.m. Sharaji. Before we let you go, what do you think be two very good gifts for Saptami and Ashtami and Navami from your end?
I think frontlines we have spoken about
Yes.
on the mid-cap, small-cap space. You could look at something like a Pratap Snacks. We have spoken about it earlier. It's again moved up a bit. There could be some sore point in terms of palm oil prices internationally going up. But other than that, I think valuations are still comfortable. And I think the long-term trajectory should be very strong for this company once the capex starts to play. So this is one, and the other, I think, you could be looking at Spandana Spurti. Again,
Yes.
something on the microfinance side, it's corrected substantially. I think most of the pain is in the price, and the overhang of the state elections is somehow playing out on the valuations of these companies. But I think that could be a good idea if you are looking at a long-term investment. The valuations are very comfortable. Once the numbers start to improve, you could look at a very strong re-rating there.
Okay, fair point. And ladies and gentlemen, with that, we'll thank Sharadji. So 5 picks that have come in from the large cap stable, the top 5 being LIC India, Reliance Industries Limited, HDFC Bank and Kotak Bank, as also UPL. The other one, of course, is from the mid-cap space, Fusion Micro. The stock has corrected substantially, therefore offers a far more juicier price entry compared with what we discussed earlier. Sheela Foam, HLE Glasscoat, Pratap Snacks, and Spandana Spurti. With that, Sharaji, thank you so much for your time. And as usual, as I have said, it's always a pleasure talking to you. And in the next fortnight, I hope to meet you in person in the City of Joy.
Great, sir. I'm looking forward to it.
Thank you, Sharaji. And with that, ladies and gentlemen, let's come back to the market. At the moment, 35 points lower on the Nifty. I wouldn't be much worried about unless there is a massive correction. But for the moment, it is the mid-cap, it's the Nifty and the Bank Nifty which are slipping lower in red territory. But absolutely no pain points when it comes to the kind of rallies that we are seeing in the mid-caps and the large cap, the mid-cap and the small-cap index. Let me just mark that for you. Software here is not working, but just allow me a moment. 1% higher on the Midcap index, a bit of profit booking here as well, and 1.23% higher on the small cap index. Let's look at the pullers and draggers on the Nifty at this moment. Extremely slow net, my sincere apologies for this delay, but so far the Nifty gainers are right there in front of you, dominated by the strength that you are seeing in Pharma. ITC is pulling the Nifty down by 35 points. That's very, very surprising. Reliance pulling it down by 34 points. 23 points in the negative have been contributed by HDFC Bank. Sell-off in L&T continues, 1.2% lower. 13 negative points, and Lever 12 negative points. What is holding the Nifty up? Divi's Lab 14 points in the green. SBI 14 points in the green. ICICI and Axis Bank 13 and 11 respectively, and Bharti Airtel 9 points in the green because of its nearly 1 percentage point uptick as far as markets are concerned. Swati Hotkar joins us from Nirmal Bang Securities, where she is the Associate Vice President for Technical Research. Namaste Swati ji, and a very warm welcome. Festive greetings to you. A bit of a profit booking on the Nifty and the Bank Nifty. 25,000 has been given back to the bears. Is this a cause for concern, because we have corrected from 25,250 down to what we are now? Is this a dead cat bounce that we are seeing, or it's all okay?
Good afternoon, Shailji. Definitely, it's a little bit point of a concern because both the indices as of now just once again given the breakdown of a 50 days moving average. In the early morning, both the indices was holding the short term moving averages supports, but in the second half, we are witnessing a sharp corrections from the higher level, or say the profit bookings from the higher level. Now the Nifty given the breakdown of the 50 DMA, which is a very cautious sign at the current levels. If it's closing at the current levels, say by below the 25,000 mark, then definitely this sell-off is likely to be continued, which might take a Nifty towards to its 100 DMA, which comes to at around nearby 24,400 level. So up to that level, we might witness some sort of a corrections. On a higher side, as long as Nifty trades below 25,200 level is acting as a very crucial resistance levels. So below that level, the view will remain a cautious, and we might witness some sort of a profit bookings in the coming few trading session as well. Coming towards the Bank Nifty as of now, it's hovering nearby its 100 DMA. Between the 150 DMA, it's just trading. But 51,200 will act as a crucial support level. It fails to respect that level, then this selling pressure is likely to be extended towards to 50,600 or 50,700 on the downside. So view is a little bit cautious on both the indices. Definitely one should avoid the major long positions at the current market price. But I can say that this market is a very stock specific market. So try to concentrate more into the stock specific trading rather than concentrating on the Nifty and the Bank Nifty trades.
Okay, ladies and gentlemen, that's how it is. This is possibly the retest of 25,000 that's happening at the moment. Remember, it's the weekly expiry tomorrow for Nifty and today for Bank Nifty. So a bit of profit booking is most likely, but I feel a little uneasy if an index corrects 250 points from the top, which has happened in the case of the Nifty at least. And there is some news coming in from the cabinet. It approves 17,000 crore rupee plan to fortify rice. Is it? For fortified rice till December 2029. Okay. Let's look at rice stocks. KRBL, LT Foods, Chaman Lal Sethia. These are the three that come to my mind immediately. Let us see how prices are moving there, and then we'll take a look at it little later. See that spike that came in the last 20 seconds or so. We'll also look at LT Foods, which is Dawat, and of course the big one of them all, KRBL. It will just sort of come on your screens today. Okay, we'll wait for them in a while. Meanwhile, Swati, what are the one or two stocks that you are looking at in terms of outperformance on technical charts, or would you rather stay away from the market? What are you advising clients to do?
Yeah, as I said, definitely it's a stock specific market, and some stocks are really doing very well on the technical front, say on the price wise also. The counters I'm looking on the positive side as of now, one is the Lal Pad. This particular stock is really doing very well from the last few trading sessions, even though the market was correcting. But this particular counter was trading in the pattern of the high tops and high bottoms. Currently, it is trading nearby 3600 levels. The way it is giving the performance on the price and the volume basis is really admirable. And I'm looking for a target of 37 to 3750 levels on the higher side. So those who are having any long positions or want to create it, definitely one can go for a long at the current market price as well. 3540 is acting as a very crucial support level. So by keeping that stop loss, one can definitely hold their long positions for immediate target of 3700 rupees. Another counter looks on a positive side is HDFC Life. Why I'm recommending this particular call? Because this particular stock is really doing very well on the price formations. Also, the interesting fact is that the stock is under the formation of a symmetrical triangle, and today it is almost has given the breakout of the same levels with the decent volumes. Currently, the stock is well placed above the 20 DMA also, which is a very positive sign on the technical fronts. So I believe that we likely to witness more positive momentum in this particular stocks towards to 750 to 765 levels. Currently, the counter is trading at 716. One can go for a long positions by maintaining a strict stop loss of 700 rupees on the downside for a target of 760-65 levels on high side.
Okay, two stocks, Swati, before we take this conversation forward. What is happening in Divi's Lab, and what do you think should investors do in Trent? Both of these stocks have made record highs, and a very sharp run up is happening.
Correct. You had rightly pointed out TVs and the trend is definitely outperforming the market in the last few trading sessions. But looking at the current market price momentums, definitely one should hold their long positions because we have seen a very good kind of a rally. Divis already has given a 10% return in this month itself. It's trading at nearby the all-time high levels. I will suggest to hold their long positions, but not to initiate at the current market price because within a span of 2 days, we have seen 1,000 points rally almost in this particular counter levels. So I will suggest to hold their long position, but this momentum is likely to be continued towards at least 6,100 or 6,150 levels on the higher sides. So one can definitely hold their long positions on the DBs. Coming towards the trend, yes, this particular counter is also doing very well. From the last few months, we are continuously witnessing a uptick rally from almost 3,000 to 8,200 levels. Longs positions at the current market price is not recommended, but definitely one can hold for into their portfolio for immediate target of 8,400 rupees. I'm looking on a high side as such. So both the counters are really positive. One should hold the into their portfolios as such.
Okay. So, ladies and gentlemen, if you are lucky enough to have them in your portfolio, don't exit. But frankly, in these stretched times when there is so much pain around us, it will be really very difficult to sort of recommend an entry at current levels, especially on Trent. I think this is the best performing stock in the FNO space in 2024. I would imagine it's given a 200% return. We will check that out, but it's one of those great rallies for those who have remained invested. Swati, what would be your view on the mid cap and the small cap space? Is the correction that we are seeing enough? Do you see momentum coming back into frontline mid caps?
See, Shelji, in the mid caps, as of now, we are not getting a at the stretch momentum rally, but definitely there is some sort of a up and down on both the side. We are witnessing a momentum. I will suggest not to initiate a major long positions into mid cap, even though we have seen some corrections. But as of now, it's not showing any kind of a major reversals from the here onwards. So definitely one should majorly avoid the mid caps at the current market price because we have seen that the market has shown a very good kind of a correction. Over here, FNO counters and the Nifty 50 counters will show a very smart rally on the higher sides once the managers give the Nifty or the bank Nifty gives the sign of the reversal. I will suggest to just hold on for a mid cap sectors as such, try to concentrate on the large caps itself.
Okay, that's a very sensible outlook that stay away from mids and smalls. They're very, very volatile, and of course, relatively speaking, large caps are way more relatively undervalued compared with the mids and the larges. So, Swati, that brings to me the most obvious question: which large caps?
See, in the large cap, definitely one can go for a Cipla as well at the current market price. Currently the stock is trading at 1680 levels. This is one of the pharma counters, and it can be also act as your defensive particular stock in this kind of a market. If you look towards on a larger degree, this particular stock has under the formation of a flat pattern trading in a upward rising channel. So all the technical parameters
Yes.
are really doing very well in this particular stocks. So at the current level, the risk reward ratio will be also favorable. I will not suggest to buy the 100% at the current market price, but definitely you're getting any dips. Try to accumulate at least 20
Yes.
percent on every dips, and I'm looking for a target of at least 2000 levels from here onwards if you're looking for a short term period of a time. So Cipla is one of the good counter. One can go for a long position on every dips.
Okay. Uh, Pharma has been an outstanding performer over the last 3 months, and frontline stocks such as Sun Pharma and Cipla are at record highs, and they have come very easily, very quietly. We get focused on defense, we get focused on railway, we get focused on capital goods and so many other sectors. But here is Pharma. Pick out any top performer, mid cap, large cap, or small cap pharma in its space, you will see a record high. Cipla, Sun, Dr. Reddy's, and Divi's in large caps. Aurobindo Pharma, Lupin, to some extent, Syngene, Suven Pharma in mid caps, and PPL Pharma, Marksons Pharma. So many of them in the small cap space that have given stellar returns without shareholders losing sleep overnight. So, one of the best sectors in the last 3 odd months where returns have been fantastic. Swati, your view on public sector banks, given the change in stance that has happened in the RBI today, what do you think is a good stock in the PSU banking sector where you would bet on the long side for the next 6 months?
If you're looking for the next 6 months in the PSU bank, definitely I will suggest for the SBI and the another one will the Bank of Baroda. This particular counters will really will do very well in the futures. Why I'm saying SBI? Because in the past few trading sessions, we are witnessing a very sideways consolidation within the price momentum as well. The stock is just trading within the span of 50 rupees, say from the 70 to 800 levels. We are not witnessing a major sharp correction, even though the bank Nifty is falling down on the lower sides. This particular stock is we are witnessing continuously buying momentum whenever the stock comes down at the support levels of 750 or 760 levels. So this particular kind of a setup gives a confidence in the mind of the analyst as well as in the mind of the clients also. And I believe some sort of a reversal can be seen very soon into this particular stock, which might take a counter towards to 850 to 870 levels on the higher side. So I will suggest go for the SBI at the current market price. And another counter is Bank of Baroda. It's a very slowly and steadily counter momentum as of now. If you look towards the weekly chart, the stock is under the formation of the inverse head and shoulder pattern. Whenever we get such kind of a formations when the stock is trading at a lower level, definitely we will going to witness some sort of a reversal over a period of a time. So I will suggest at the current levels, the risk reward ratio is really favorable. Currently, the stock is trading at 246 all levels. We are looking for a breakout of 255. So I'm just preempting the breakout at the current market price. Once the stock manages to give the breakout, definitely this rally can be extended towards to 270 to 280. So one should keep into the mind the Bank of Baroda as a buying counter in their list as well.
Okay. It's now almost 3:16, just 14 minutes left for trade to lapse today. The Nifty bank is in the green, very volatile today, but I was hoping that you would have a very strong close above 25,100 on the Nifty. Well, that has not happened, but sectoral indices have sort of helped the index very well. in particular the Pharma index that we've just discussed, up 2%, and it is the top performing sectoral index today. A very strong move coming into the realty space. This is clearly an indication as to where interest rates are headed and what the market thinks. Of course, the small cap index is up 1.3%. It was higher during the day, but I'll happily live with this. Mid cap index is up 1%, and the two aggressive mid caps, the Nifty Next 50 and the Nifty Alpha 50, are also doing pretty good. The advanced decline ratio is 2:1 throughout the day. It has remained that way, and it just shows that the underlying granularity of the market is pretty good. I only hope in the next 13-15 minutes you see the Nifty climbing back above 25,000, and that will again sort of make call writers at that level a little more edgy, and tomorrow you just might see a bout of short covering. Your view, Swati, on L&T, the counter is available below 200 DMA. What would you suggest for a 1 year horizon?
See, the L&D, the longer term horizon is definitely, my view, personal view, will be a little bit cautious to negative as such. Why I'm saying that? Because from the last 4 to 5 months, the stock was under the consolidation within the range of 3,500 to 3,800 levels. Now the counter has given the breakdown of that cluster support level, which is a very cautious sign on the weekly and the quarterly charts. So I believe we might witness some sort of a correction, or say the profit booking, which might take a counter towards to 3,200 to 3,000 levels as well. So on a longer term horizon, definitely one should book the profits into the L&T. Any dips towards 32 or 3,000 levels, definitely one can go for the long position, but not at the current market price.
Okay, that's a very sensible view at this point of time. Do you feel the same about Tata Motors? We've seen a 23-24% correction on Tata Motors from a high of I think 1150 to yesterday's low of 916. What are the medium term charts of Tata Motors telling you?
Chelsea, the Tata Motor has already shown a very good kind of a correction from almost 1200 to 980 levels. Now, currently, if we look towards the weekly chart, also it has a very good trend line support of it around 850. From there onwards, we are witnessing some sort of a pullback rally. My momentum indicators, such as we are following the RSI, it's trading near the oversold zone, which indicates that from current level we might witness some sort of a positive or the reversal for a short period of time. So I believe over a period of time we might see some pullback rally in higher side towards to at least 1,020 to 1,040 level. Then again we might witness some sort of correction. So on a continuously basis we will not witness a fall, but definitely there will be some positive move. Then again we might witness some sort of a correction. But at the current market price, I will not suggest to short position or book the profits. Definitely one can book the profits, or say by maintaining a strict stop loss of a 880 on a downside, you can definitely hold your long positions. Any momentum up to 1,020, 1,040 levels, one should book their profits, but not at the current market price.
Okay. The Nifty, Swati, is back above 25,000. That's a relief. We have 9 minutes left. Let's hope it closes in the green now, which is above 25,013. Let's hope it happens. I just want to mark, ladies and gentlemen, new highs in the market today. There are lots of them in the pharma space. Divi's we've touched upon. Glenmark 2.9% higher. Ipca Labs 5% higher, 1615. You have Cipla, which has been marked by Swati. And of course, you have Torrent Pharma, 1.2% higher, 3560. Very quietly, Infosys has hit a record high. Nobody has marked it since morning. Ahead of its second quarter numbers, Infosys, ladies and gentlemen, is at a record high. And this is, I think, the only IT stock. Okay, even Coforge is at a record high, 73.89, up about 1%. One stock that we generally don't mark is Bosch India, 38,650, and now you can well imagine why we don't mark that. It's a very high digit, 5-digit high priced counter, but again at a record high. And of course, the likes of Naukri.com, MCX and the Bombay Stock Exchange. So that's how the story is for today, ladies and gentlemen. Let's look at volume buzzers. Anything that catches my fancy. LG Equipment I had marked in the morning. Surprise, surprise, Birla Corporation. This is a mid-sized cement player. Swati, I'll request your view on Birla Corporation. 2% higher and 5x the 5-day volume.
The Birla Corporation strategy this year was not a good year for this particular counter. We are continuously witnessing a sell-off from 1800 to almost now 1200 odd levels. Today we have seen a major volume, but the price momentum is very limited. So I believe that this pullback will be a short-lived as such, but definitely we might witness some extension of this pullback to rally towards to 1280 because it is a very strong resistance provided by its 20 days moving average, because we have witnessed from the last 2 to 3 months that stock has always touched the feet of a 20 DMA and again we witness new low. So in this kind of a pattern, the stock is working as of now. So my view is not much positive in this particular stock, but definitely this pullback rally can be extended up to 1270 to 1280 levels, and again we might witness some fall. So I will suggest to avoid this counter on every days. One should book the profits or should exit the long positions.
Fair point. And you started with Lal Path Lab, again days high, 36.21. The counter is gaining confidence. So it's not only an individual stock tailwind, but this is a sectoral tailwind in the pharma space that is also working to its advantage. I'd just like to see the top performers in the Nifty Midcap index. Just hold on with me, ladies and gentlemen. Okay, I'll take new names. Exide Industries, 4.5% higher, 517. Tractor maker Escorts, 4.5% higher, 4031. It is again reclaiming the 4,000 rupee level. Okay, Poonawalla FinCorp, this is a very, very storied NBFC. Remember, a cut in interest rates will help NBFCs and banks. Therefore, you see this a very nice momentum coming into Poonawalla and other NBFCs as well, such as Muthoot Finance, to name another one. Okay, Suzlon getting its mojo back, 5% higher, 76.91. And of course, you have a strong move coming into IREDA. This is something that I wanted to check with you, Swati. IREDA and HUDCO. Is the worst behind us?
IREDA is definitely one of the very good counter. We have seen a very good kind of a rally once the stock has listed into the into the secondary market. And see, this kind of a correction we are witnessing for a very short period of time. But definitely this counter is very positive on the technical front as well as on the fundamental front. So any dips towards to 200 levels, one should go for the long position if they're looking for their portfolio management as such. So I will suggest not to worry. Whenever we see some sort of a correction, this particular counter will be the right stock to pick into their portfolio. I'm looking for a target of at least 300 to 340 levels on the high side. So it's definitely buy on deeps stock one should have keep in their mind for the selection into their portfolio.
Fair point. And Swati, I think both our thoughts will be granted. 25,000 above is what the Nifty is at. And just maybe over the next 4 or 5 odd minutes, you will see the Nifty close in positive territory. Although it's the last half an hour average price that is taken on the Nifty, nevertheless, all the bulls are making a effort to sort of come back in the green, and that will be a positive close. Bank Nifty is back in the green, 39 points higher on its weekly expiry day. It's really something to look at in terms of what are the stocks that are pulling the Nifty lower when the Bank Nifty itself is in the green. So the biggest culprit is Reliance. Let's just see what's the volume today on Reliance in terms of the most active counters. Okay, 1900 crores, nothing much to be worried about. HDFC Bank again flat, 300 crores in terms of volume. Divi's Labs 1700 crores, 8% higher. This is really, really good. CDSL, okay. before we let you go, Swati, your view on CDSL. It's trying to get parity with the Bombay Stock Exchange, still far off. 8% higher, 1471. What are the charts telling you?
The charts is really positive at the current market price also. The way we have seen a very good pullback rally from the lower levels, almost from 1380 to now almost 1780, 100 points momentum within the one trading session as well. The chart setup is really positive as of now, but I will not suggest for the fresh long position because the counter is already 8% on higher side. But this rally can be extended up to previous high, which comes to at around 1580. So definitely one can hold the long positions, but at least keeping the strict stop loss of a 1400. If it manages to give the breakdown of 1400 levels, then we might witness some sort of another round of corrections, which might take a counter towards to 1300 and 2080. So at the current market price, the view is positive. One should hold by maintaining a strict stop loss of 1400 for immediate target of 1580 to 1600.
Fair point. And before we finally bid you goodbye, Swati, one or two calls that you may want to take long or short the market. What would be your view on the Bank Nifty for tomorrow now that it is in the green?
See, Shelji, my view is a little bit cautious on the Nifty as well as on the Bank Nifty. The indices is currently closing at a flat level only. The particular counter is just hovering near the moving averages. I'm not much happy about this closing market as such. I will be happy once the indices gives the closing about the 51,500 level. So my view is a little bit cautious. Probably we might see some positive momentum, but on the closing, at least we need to stick for at least 1 to 2 days closing basis is more important. If it manages to hold that level, then only I can say that some sort of a reversal can be seen into the market. But at the current levels, I'm not much happy about the 2 days closing. We might witness some sort of a more selling pressure, which might take a counter towards to 51,000 or 50,800 levels on the downside on the Bank Nifty front.
Right. With that, Swati, thank you so much for this very interesting half an hour. And of course, we'll remember the caution on LNT, the long call on Lal Path Labs, and of course, the view not to go short on Tata Motors. Thank you so much for your time, and it was really, really interesting to talking to you. Festive greetings to everybody at home and at Nirmal Bang. I hope you have a great time over the next 3-4 days.
Thank you.
With that, ladies and gentlemen, we'll wrap it up. The Reserve Bank of India announced pivot in its stance from accommodative to neutral as far as interest rates are concerned. That has helped the broader market in understanding that a rate cut might be on the anvil 2 months later, starting with 25 basis points. The main two indices have been quiet. Nifty Bank because of its weekly expiry, and Nifty because you just might see some selling pressure on Reliance and HDFC Bank. Overall, it's been a great day. A very strong move on Pharma and Realty as far as sectors are concerned, an equally strong move on the Midcap and the Smallcap index. So while the main two indices paused for breath, but the rally is deepening and broadening as far as the Lal Street is concerned. Look at the NSE 500. The index added 110 points, 0.4% higher at 23,623. The mid cap and the small cap index have added a good 1 percentage point, although they have also shown signs of profit booking at upper reaches, but nothing to be worried about. And overall advanced decline ratio has been fantastic. 1,700 shares in the green, 700 in the red. Let's hope for a better day tomorrow as far as the Nifty is concerned, which will be its weekly expiry. Thank you, ladies and gentlemen, for joining us on the show. We'll be back tomorrow early morning as far as markets are concerned on the live side, and at 4 p.m. with another round of Market Guru with Mr. Piyush Pandey.
जैसे ही मैंने आज ये गाड़ी में जलेबी चखी, मैंने अपने बहन को सीधा मैसेज भेजा। मैंने कहा, प्रियंका, आज मैंने अपनी लाइफ में सबसे अच्छी जलेबी खाई।